price move in a specific and defined direction. It is the movement of this price in a defined direction that help us to analyze and predict the behavior of market before making our entries and exit. This is Soji and you are welcome to Soji Forex. If this is your first time of coming across our channel, we share ideas in share market, take advantage of the strategies and the lesson being shared. Apply it and you will see improvement in your trading results. In this video, we want to look at how to trade breakout. How do we trade the market breakout? It is important to know that breakout is price moving outside a defined support and resistance. Whenever we see price move outside a defined support and resistance breakout, for instance, if this is our support and if this is our support and this is our resistance, and price keep moving this way from support to resist, from support to resistance, to support to resistance, to support to resistance. This is our support and this is our resistance. So when price keep moving this way, we can term this as price moving in a defined zone. But we said breakout is when price move outside of this defined zone. So what we are trying to say in essence is outside this support and resistance, a breakout occur when price either break to the upside, break the resistance to the upside, or break this support to the downside. Regardless of whichever it is what we refer to as a breakout. Now looking at this chart, you realize that here we have our higher low. So a breakout can either be from a level of support and resistance, it can be from a channel. Price can as well break out of a channel, can break out of a chart pattern, regardless of whichever. So a breakout of our potential trading opportunity. So any area of breakout is area of potential trading opportunity. For instance, looking at this chart now, price was hitting this level of resistance. That is the first time, second touch, third touch, fourth. And look at it here. We have 1, 2, 3, and 4. So now this is price moving in a confined and a defined zone. So you can buy low, sell high, buy low, sell high, and you can repeat this pattern over time. And then looking at this scenario here, price break out of this support zone but return back inside the zone, right? And when price, ideally, when price break a support, automatically the support becomes a resistance. So when price break out of this support and it pulls back to this support, it's supposed to validate this support as our new resistance. But here we see that price break back into this support, which is supposed to be validated as a resistance. And the validation we are talking about in essence is price break out of it this way. Now price pull back to the support. Price is supposed to return back from the support to the downside, which means we could have a retest. But in this case, price break out of the support, went back instead of validating this support as a resistance by giving us a retest. Price went fully back inside, and still you can see what happened now. This is the scenario we are supposed to have on this breakout. Look at what happened. Here now, price went back inside. Now, instead of validating as a resistance, price break it inside again and validate it as our new support by what? By retest. You can see that price break up now, retest it and went to the upside. So this scenario here that happened is a fake out. It's a fake out. It's just an attempt to take the buyers out of the market and then continue in that direction. And then look at what happened. Price came back to this level now. After it break in, it retest, so and then it went back. So another way is, remember, we say price breaking out of a confined zone is what we regard as our breakout. So now, having confirmed this breakout, the next is how do we make our entries. Now looking at this particular pattern, you can see that here now at this resistance, price break out of this resistance. Look at here, price break out of this resistance, and look at what happened. Price pull back to this resistance, gave us a rejection, more or less like an evening star, and then we have this follow-up candle and then these volumes that move to the upside. So our way of trading breakout is for us to wait for price to break it and then retest, then we can make our entry. Okay, now this is what I'm saying in essence. The price break out of this zone, retest it, and then it move. So our entry is at this candle that is formed in that zone. So this rejection candle after this reset with this follow up candle becomes our entry. That is how to go about it. Unlike this breakout to the downside, if we had gotten a retest here, we would have validated this level as a resistance and would have been going to the downside. Now the same thing is applicable to this upside. This resistance was broken, so in order for this resistance to be now confirmed as a support, there is a need for it to hold price, and that's why price break it, retest, and we have a move to the upside. Another way is when, okay, now this is a triangular pattern, and you can see that price has been making this lower high, lower high, lower high, and you can see how price has been respecting this trend line. And you can see here we are having higher low all the way from this downside. We have been getting our higher low, higher low, higher low, and then look at what happened. This candle now break out of this triangle. You can see now this candle break out of it. So what do? We now wait for a pullback, a retest. So price comes back and retest this zone. So when price break out of it, all you need to mark those candles that break out of that zone. And you can see that here now, in order for this to be validate, we need a validation here to validate this trend line as our new resistance, because you can see that it is resistant. So to validate it as a support, price break through it, pulls back, retest it, and give us this engulfing candle, and we now move, follow with this rejection, will be in this trade and will be on our way to the upside. Now the same scenario is applicable here. All these are chart pattern. You can look at what happened. Price has been touching, and price break out here with this candle, and look at what happened. Price pulls back to give us this retest, and from there we have this movement, knowing to whether this is our resistance. Price came back, retested, gave us this rejection, followed by this engulfing candle, another rejection, and you are good to go in this trade. Your entry is here, and you will exit this trade once price returns back into this zone you would have exit. And had it been this was not validated the way we have on our first chart, where there is no validation of this as our new support. So what the retest does is to validate a resistance as a support when it retests and go to the upside, and as a support below when it break it, you have to retest and continue to the downside, giving us a sign of resistance. This is a bullish, this now is a bearish flag pattern. This is a bearish flag pattern, and in this is a bearish flag pattern, and we have this move. Price was moving up as a flag pattern, and then suddenly break out of it with this candle. As I always say, always mark out the candle that gives the breakout is the candle that will hold the price when price return. And this bullish move went for a retest, and after that we have these candles that got rejected. So this is a break. So this has to be confirmed now as our new resistance, and then you see that beautiful move to the downside. So this can be traced all over. You can find this pattern and you can take advantage of it. You always wait for a break of it, and then you wait for a retest. The same thing is applicable to support and resistance. The same thing is applicable to trend line. Just as you have seen here, price break out of it, retest it, and move to the upside. Now this is a live market scenario in trade, and look at what happened. Price has been coming down, right? And then suddenly we begin flag pattern. And this bearish flag pattern, we need to trade this bearish flag. For we know that already we have a break of structure. Initially, price has been bullish, and in this bullish market, there's a break of structure. Price pull back to fill this imbalance, and the movement of price to fill this imbalance, it was gave us this bearish flag pattern. So because of this bearish flag pattern, we already know that price is going to fill this imbalance. And if you use our Fibonacci level, we will realize that this pattern is around our 61.8 level of the Fibonacci. You can see how price fill it back, and it's a short pattern. Then look at what happened. Price break through it with these candles. Okay, this is the pattern, and we have this break. Price break through it with this candle, and as I always say, break the zone. And look at what happened. Then this bullish candle went retap inside, gave us this particular inverted hammer, and you can see afterward price is now making its way to the downside. So this is pretty simple. This is the break, this is the retest. So this is how you trade. This has been a support over time, and once price break the support, you need to validate it as a resistance. So be patient enough. The retest is what validates, that will make our entry. And I believe you are getting value from this video. Please do not forget to like, share, subscribe, ask your question in the comment section, and turn on your notification bell so you'll be the first to get notified whenever we published our next video.